Good morning, MMTs, senior MMTs. What will the trade action be like? Like we always tell it every morning, I'm going to tell you, here's that gap up list. It's very diminished compared to the other morning gaps, meaning that the pre-market futures, the artificial gap that's in play, is narrowed and contracted from early on. Right now, it's at 607. So as these futures were higher up in value a couple of hours ago, is that they have diminished and come down. So therefore, the actual price action in equities and sectors come down. So we don't have nearly the artificial price gap as we had on 3-1. And this is March, and the spring is upon us, and markets like to have spring rallies. As we have said, how about spring selling? It was 2 weeks ago, no, it was last week and the week before that we called that these markets had to come down. It's on stockmarketfunding.com. We weren't joking you, okay? And it's phase one with the indexes. I'm talking about indexes. I'm talking about the Dow, the Nasdaq 100, Nasdaq Comp, S&P 500, large cap S&P 100. I really focus on them because what has happened is that we started that correction, that reversal pattern. Dollar price movements have come way down compared to where they were at the top. We levered back up in the delta retracement to the upside, and we have another reversal that came into play on 3-1. That was yesterday. So we do have technically, our technicals are not public indicators. No, they're pure mathematical equations that also decipher down the actual immune system or the strength of the indexes per se. And how does the broader equity market respond so that when equities roll up toward their high, why can't they close up toward their high? Or why can't they maintain the higher dollar price range? Is because of the immune system on the indexes are at low readings. So therefore, the individual equities or names you're trading, the high beta ones, are going to roll up, but then they're going to just roll over. And that's why the short side of the market up toward the tops have proven to be extremely well, and so have the bottoms as well. And that price action volatility in both directional markets, long and short, using the MMT platform, gives you the ability and competence and execution to do well. And that the immune system on the indexes, using our yearly mathematical index formulas at SMF, which are quite accurate and 100% correct, we will show them to you, and we'll let the factual evidence and the truth be its own witness. Not opinion, not anything else. Hardcore factual data and reality. The key is that equities up toward the highs need to be sold short as the weakness in the IR and bid and ask ratios start to form. Meaning that there's a change in the numbers in your MMT platform so that you can establish the weakness in the name. And once again, as a market maker, you have to understand that. So here's the gap up list. It's very diminishing. So every day, like Netflix, it gaps right up. That's where you want to look at getting short, just like they did with Google yesterday. Right there when that opening bell, bam! And weakness came right in. They put the high in. The short was good all day on some of the names that took a while in that pre-market gap yesterday. Same thing here. It's just that it's not going to be to the magnitude that it was yesterday. And as far as the gap opened down on the Nasdaq Comp, there was some downgrades that I know of. But what happens is that people that don't know how to short a market, they're not professional. They don't have a system. They don't listen. The first thing they do is they see the stock down $3, and the first thing they want to do is short the bottom. When the actual market maker walks it the opposite way and takes the shorts out within the first hour of the opening bell, and then they roll over, and that's the time I look at getting short. So these are the weaknesses in the names. Downgrade here, and you've got 3. So we're about equally weighted. If I go to the listed stocks on the NYSE, we'll probably see something kind of similar. But each day is very important to know that within the market top reversal patterns is, here's the gap down list. WFT, GTY, you got S&P, MetLife, EOG gapping down again. Second day in a row. WTI. Okay, Mosaic has got a trend reversal in play. Potash down 50 cents. So that's the gap down list. It's not big, but that's what it is on the NYSE. The gap open now, on the other hand, we'll wait for it to populate. And we're going to get down here, and we have a few of them. PAY, SSL, PTR, CAP, PHI. Oh, your Salesforce has a little gap today. And just remember that the indexes have not recovered yet. So therefore, when equity prices make their high, they will start to contract and build weakness. And that's where a short sell could come into play 2-3 hours all day. All day yesterday, we had that kind of problem the indexes did. It's because that they should have not sold off, because now that they have, it's contributed more weakness. That's what it's done to those. So basically, we just want you to know that equities at their higher price range on the opening bell, first hour, or whenever it's made, for that matter, is that they're going to slide the bid automatically. Automatically. You just have to know MMTs when that short sells. I'm going to conclude pre-market, not as in depth as it is. You can see it. We had the ADP. We got a big number coming out on Friday. That's the unemployment number. We're going to watch how the lower end of equities today bounce off of that bottom. But then there is delta expansion, teeny expansion in the MMT platform. Meaning that if I'm expanding and I build up and I stay relatively high in the readings that the MMTs are taught to use as a market maker platform, so that you can make your transactions between the public. If the public tape is always in a catastrophe. You have a system called a market maker platform. You are a buyer and a seller between the equity all day long. That's what market makers do on the floor. So you're competing with them, MMTs. The public is just the people in the middle who love to engage in the public psychological transactions that they do and the kind of goofy thinking they do. Hey, we're here to make a market. That is your ultimate strength, is that public transaction, and how wrong they always are up at the top and how wrong they always are down toward the bottom, and how the stock market loves to take the retail public and then suck them into the transaction. They love to short bottoms and they love to buy the highs, and then they reverse, and they don't understand how the market maker spreads work long and short as a buyer and a seller all day. That's what this business is about here at SMF. And futures are artificial price gaps. As I said yesterday, and they would all come down. So the MMTs in the apprenticeship program right now, which is a 52-week program, into the MMT trading division, because your apprenticeship allows you to make money and to get involved in all of the mechanical processes that go on down there in New York and different exchange floors and behind the door number 1 and door number 2. Anyway, pre-market futures, good luck. Same thing. Markets have got a reversal. have to see that bottom up strength. If that bottom up strength is diminishing, the broader equities are going to roll over and sell short again, should that be the case. If strength is going to be built, they come off that bottom, they have teeny expansion, they don't look back, and you have to transact. And then we're going to find out during the midterm part of the trading day is exactly where that immune system is as far as the equities go and the indexes.